there for you guys so that you can see just how corrupt Joe Biden is and how much of a liar he is, and just exactly how much Mark and I have been dead on the money with what we've been saying about going back in history and the theft of the speech. So, August 2nd, 2023. Good morning, and here's Mark Putrino.
Hey guys. Hey, let me just see what's going on. Oh, the U.S. is downgraded. So this is kind of interesting, right? There's three rating agencies that rate debt. There's Fitch, there's S&P, and what's the third one? Fitch, S&P. Anyway, S&P downgraded the debt, I think in 2010 from AAA to AA.
Mm-hmm.
Oh, Moody's is the third one. And now here we are 13 years later and Fitch comes out and downgrades it.
Listen, man, and that's this continuation of Barry's legacy right there. Barry did that to us first, and Joe's done it again. It's amazing how we can really tear our policy up, our economic policies up real quick.
And God, this freaking Democratic obsession with Donald Trump really, really needs to end. You know, there's a Simpsons episode where I think it's one of the Halloween episodes where all these like marketing icons or marketing mascots come alive, and basically the gist of the episode is if you ignore marketing, it goes away. And by doing all this stuff with Trump, man, they're just making him stronger. I just don't get it. It's almost like they want him to win.
I agree, Sean. Are we still echoing?
Um,
It sounds good to us, so we can't tell.
yeah, let us know.
Yeah, listen, the Simpsons have been dead on, man.
Okay, so he fixed it. All right. So anyway, we talked about Tupperware at length yesterday, and what I was saying was that if there's no news, a move like this is just not sustainable. All right. If there's news that's some kind of a game changer, you know, it could be earnings, it could be a new product. Um, Maybe a move like this is sustainable. But if this is just something that just gets jacked up by the Reddit crowd, there's just no way that this can hold. And look at this morning, it's down 14%. It's all the way down to 466. So we rallied, and where did we find resistance? So despite all the news, despite the meme crowd, despite this, despite that, look what happened. Found resistance at a level that was support before and resistance over here. So my guess is this continues to go lower. And there are options on it. So, you know, it could be a good trade to buy some puts. They might be kind of expensive, but you can get some that are probably out of the money relatively cheap. But when you see these, it's like shooting fish in a barrel, man. When these Reddit people get behind something here, it's like they're always wrong. And I hope I'm not insulting anyone, but it's like, you know, they're always wrong. So if there's no news, there's no way you could justify how this company went from 66 cents a share to 5.5 in a matter of a week. So anyway, I suspect that this will continue to go lower.
Well, Mark, they're the reasons why we started talking about doing this is so that we could actually give people an understanding of the levels and the price action, because really that's what it all dials down to.
Yeah, and I think this whole Reddit crowd really should sign up for our site here and learn about how Wall Street really works and
It would
dispel
fix
some
the
of the
market.
myths.
It would make the market understandable again. I mean, you can't trade that. I can't trade that. I've been trading, with you for a couple of years now, and this last week I've been just getting washed out.
Well, that doesn't sound very good.
Well, no, it's not. It's gone against me a couple of times on a couple of big trades, and it's probably more FOMO because I revenge traded one or two. But it's I still make these mistakes that just drive me insane. But it's fine.
Well, at least you're aware of it.
I am. I know exactly when I do it. I know exactly when I've held it too long. I know exactly when I've gone past the point of no return. It's just sometimes I get it. I'm my own worst enemy still, but I'm learning and I'm getting better.
All right, so Sean has a question. Do you look at the top 10 holdings of it? Well, I mean, it depends. If the sector's not doing anything, I usually don't. If the sector looks like it's about to move, if we find a sector that looks like it's about to move, then we look within the sector for trading ideas, because You could always trade the ETF that we look at, but the ETF that we look at is an aggregate or an average of what's in the sector. So just by definition, there's going to be things that move more and things that move less. There's also sectors that are dominated by certain things. Like, for example, the technology sector here, which what is going on this morning? See, right, once again, we're right back to this 177 level here. It's getting kind of boring, right? Like this is dominated by Apple and Microsoft. But if this was to start to break down, and my suspicion is it's going to, I mean, you could trade this itself, right? You could buy your puts on this, but you could also look within the sector at the different technology names to look for something that looks more vulnerable. As a matter of fact, let's take a look at the energy sector because I saw oil was up this morning. Let's see. So oil's testing this $82 level. All right, so then we got to look at the energy sector, which is XLE. This is the ETF for the energy sector. Man, it's so nice here. It's like nice. It's like 65 degrees. There's like no humidity. It feels like it's like the fall.
And the longer we build up at these resistance and support levels, the more the more dramatic the move, Mark.
I would say, yeah, in general, yeah. I mean, I don't think you can really quantify it, but I think in general, yeah, that is the case. So here we have the energy sector, right? And what do we always talk about? When things get to important price levels, they tend to move. They tend not to hang out at them for a long time. And some of my friends make fun of me. They're like, oh, you traders are all the same. It's like, oh, it might go up, it might go down. Well, guess what? That's the case. When you get to an important price level, it's like you get to a fork in the road. So it's going to go one way or the other. I would be very surprised if by next Wednesday, a week from now, this thing is still hanging around 87.50 or 87. So we're going to go one way or the other. Now, I did see that Phillips 66 reported, and that's one of the companies that we were looking at for a potential move. So let's see where this is. It's okay. So it's down about 1% on their earnings. But if you're a trader, right, this is what you like. This is what we look for. Overbought at a clear resistance level. I mean, you don't need to be a market guru to see that this is a clear resistance level around 111.50 here, right? Let me get the exact level. Yeah, 111.50. I'm going to make the 111.50 even. So this is what we look for. This is going to make a move one way or the other. This would probably be a good thing here to put a straddle on or a strangle or a combo. I'm sorry, I get them all confused. I know what they are, but I forget the names. But in other words, you buy a call and a put. So the idea is it's going to break one way or the other. And if it goes up, hopefully you make more money on the call than you lose on the put. And if it goes down, the idea is to make more money on the put than you lose on the call. But it's going to break one way or the other. Look at this, right? We got to the resistance back in June of 22, and it was there for one day. Then we got there again in November. It was there for 3 days. And then we had this move lower. Then it was there for another 3 days. Here it was there for 2 days. So they don't tend to hang out at these important price levels for an extended period of time. So this right here is something that I would probably, I would be okay with trading this, putting a combo on it or a straddle or a strangle. Overbought at resistance. There's going to be some kind of a move here, in my opinion. And again, we looked at the energy sector. Okay. So now we can go look at stocks that are within the energy sector. This is not right. Let me go to this. Okay, there. Yeah. So here's our energy sector. So we can go look within the energy sector. How do you do that? Well, every ETF has what we call a fact sheet. So we're going to go to the ETF fact sheet of XLE, and this is going to tell us what the holdings are. Now, I know just because I know that Mobil and Chevron are the biggest companies here. So let's just take a look at them. ExxonMobil. All right, that's not really doing anything. Chevron. So when I look at this, okay, what do I see? Well, we're really not overbought or oversold. We're kind of, we're kind of in the middle of the range here. I mean, to me, I don't see a trade here. It's just like, to me, this is just like, all right, well, it's neutral. But when I look at PSX that we were just looking at, it's like, wow, dude, this thing looks like it's ready to make a move. And as traders, that's what we want to do. We look for things that look like they're going to make a move imminently. Now, when I say imminently, I'm talking, over the next couple of days or the next week.
I just saw your dog paste phony soldier.
Poor Joe.
You're great, Mark. Oh, we got you, Joe. We're on top of you, boss. We're watching you.
I think, with all kidding aside, I think he's done.
Yeah.
I think he's going to come out and say that his health or whatever has made him, his doctors advised him that he should, he's not going to get impeached because he's not going to stick around. But back in Watergate, and not that I remember it because I was only a kid, but I do read a lot about history. It's like they got to, the American people are pretty friggin' stupid and pretty spoiled. So they got to kind of bleed it out slowly. And eventually it's going to get to the point where the Democrats are going to say, they're not going to be able to ignore it anymore. And then because they're politicians, they're going to be like, all right, screw this guy. Let's position ourselves for whatever is next here. Let's position ourselves for the next thing. But, people understand this. People understand money. People understand payoffs. Like, this is not complicated. It's like this dude got paid millions of dollars so he could alter policy. And it's like, all we heard about for a year, 4 years or 3 years was the whole, Trump did a bad job with COVID. Trump did a bad job with COVID. Okay. So then Biden comes in and he goes and he meets with the head of China and he doesn't even ask where COVID came from. All right. So that would make one think, gee, maybe he's compromised. Maybe there's a reason why he doesn't want to be a hard ass over COVID. And it's because the Chinese, they know where the bodies are buried, and they can, they could call them out, or they could release the info. So, what Biden should have done if he was a good human being, which he's not, is he could have just retired 4 years ago or 3 years ago and, faded off into the sunset with his tens of millions of dollars, and that would be it. But he just figured, oh, okay, well, it's my time. And I tell this to my Democratic friends. They're like, all right, Biden was Obama's vice president for 8 years. Why wasn't he the de facto Democratic nominee? Why did Obama wait till the very, very, very literally the last day to endorse him? And that's not a good, recommendation or character reference. And it's because, in my opinion, it's because Obama knew all this crap was going on and he turned his back on it, pretended he didn't see it, because he's got that from Chicago where politics are so crooked that it's kind of just accepted. But, it's like the guy who's the vice president, he should have been the de facto Democratic nominee, and he wasn't. And that in and of itself should tell people something.
Oh, yeah. Well, you know what? Maybe he had to sit back and watch Hillary and them set up the foundation and understand how that works so that he can build his when he gets out. He couldn't really be in political power, over that 4 years because he wasn't going to even be in the same stable as Hillary when Hillary ran for president. Nobody foresaw Trump beating him and actually us making America great again for 4 years and seeing how good America can go and our economy can go and exactly how exceptional our economy is. And then, boom, here we go, Joe. And honestly, Mark, I think the guy knows exactly what he's been doing since day one. I mean, there's a video out there with him sitting in his basement saying we have the largest voter fraud network set up that we've ever had in the world before.
Yeah, I mean, he's crooked and he knows it.
So
I mean, the whole thing with the laptop where they said it's Russian disinformation. It's like,
it's all a joke. It's all a joke. No sense in rehashing it.
All right, so Chevron, I'm not really seeing anything here. Let's look at some of these other companies. Schlumberger as SLB. So we want to look for things that look like they're going to make a move imminently. Now this, it's at resistance. It's not overbought though. All right, let's just keep moving on here. Schlumberger, EOG. Now this looks a little bit interesting here, right? So this is overbought, and this is at a resistance level as well. I guess I can make this arrow smaller here. I don't think this looks as enticing as Phillips, though.
No.
All right, EOG, Conoco. What is it? Why I'm having a mental lapse here. Conoco Phillips. It's Conoco. Let's see. Conoco Phillips, COP. This looks kind of interesting, but not as good as the PSX. Pioneer. Let's look at that.
So you see what he's doing, Sean? He's going down through the sectors and through this industry here, and he's trying to find things that are look extremely overbought and about to reverse. And the most enticing one is the one that you watch.
Yeah, Valero. That doesn't really stick out at me. Occidental. Oh, XY. Yeah, this really doesn't stick out at me either. Remember, these are just the top 10. I don't know how many companies are in this sector, probably 40 or 50. But when I go through all these, if I look at the Phillips, this really is something that I would put on my radar screen because it's like, wow, really overbought at a clear resistance level. I mean, this sucker looks like it's just getting set up to move one way or the other. So, all right, now let's go look through the broader markets, and looks like things are finally going to start to trend down here, and I've kind of been waiting for it. I think we had that sentiment last week that was so bullish, and when we have really bullish sentiment, that's actually bad for the market because what happens is if the vast majority of investors are bullish, what do? Well, they spend their money, and once they're done with their spending their money, once they run out, there's no one left to push the market higher. So excessive bullish sentiment is actually bad for the market. And we got excessively bullish last week. It's kind of chilled out a little bit. But I think because of the AI stocks rallying, people got a little bit ahead of themselves. Anyway, we're down 50 basis points in the pre-market. That's a pretty decent move. We look at this technology sector again. So this is our biggest sector. And this is this is XLY. Actually, XLY, look at this. This is a pretty big move lower too. So this is consumer discretionary, and this is below resistance. So the resistance is almost like it's going to put a ceiling on the top of it. You got a lot of people hanging out just above the market that want to sell. So anytime the market gets up there or the price moves up there, there's going to be a lot of sellers coming out of the woodwork. All right. So, and if you want to see what the sectors are, just like we can go to look at the top holdings in the energy sector, right? These ETFs are called spiders, and they're run by State Street. So that's SSGA, State Street Global Advisors. So just like we look at the companies here, we can go look at the sectors. So just so I know what the sectors are because I've been doing this a long time, but just for you to understand, you go to holdings, and here are our sectors. So there's 11 of them. Communication services actually used to be part of technology, but they broke it off because it got too big. And real estate used to be part of financials, and they broke that off. And that I don't understand why. But anyway, technology is the biggest sector, so we usually look at that first. And again, we're toying with this important 177 level. Now, why is 177 important? Well, it was the top back here at the end of 21 when the bull market finally came to an end. So we got back up there in early June, and what happens? We hit resistance again, and that's because you got people who bought back here who are underwater, and they tell themselves, if this ever gets back up to my price, I'm going to sell and get out at break even. So this is why you have resistance at former peaks. Now, what we can also see here is that what was resistance turned into support. And this is because of seller's remorse. Buyer's remorse keeps resistance as resistance, or it can. Seller's remorse can turn resistance into support. There are people who sold, and when the market went lower, they're like, "Oh, I'm great. I'm all that. I'm going to be a new hedge fund guy." But then the market goes higher, and a lot of these people tell themselves, "Man, I made a mistake. I'm going to buy my shares back if I can get them for the same price I sold them at." And I know some of the people listening right now are probably saying, "Yeah, I've done that before." So anyway, resistance here converted into support. So I still think this looks a little bit precarious. I think it's probably going to go lower. I mean, that's a fairly big move, 75 basis points. We're still above the level, though. But anyway, all right. Now, the second biggest sector is healthcare. So we're going to go look at that. And this looks pretty weak, obviously. We got this big move lower. And we talked about this, right? For those of us who have been following along over the last couple of weeks, we have clear resistance at a former resistance level. And what happens is the market's moving higher, and there are people that are thinking about selling. And why would a market move higher? Well, there's not enough supply, or there's not enough sellers to fill all the demand, or buyers or buy orders. So the buyers are forced to pay a premium, and this forces an uptrend. Now, some of the people that want to sell, they notice that, oh, look at that. The price is not moving higher anymore. We got up here and we stalled out. And some of these sellers start to get nervous that there's going to be sellers who want to sell at a lower level, and the buyers are going to go to whoever is willing to sell at the lowest price. So what happens is the sellers start undercutting each other, and that causes the snowball effect. And this is why we sell off of resistance sometimes. It's not because of the news or whatever the latest news is. I see the deficit is now up to $32 trillion. And I think one of the reasons why people are kind of numb to, or kind of ignore the whole fact that our deficit is so big, is because $32 trillion is so much money that it's almost like inconceivable.
It is inconceivable.
It's like beyond human comprehension to understand how much money that actually is. Like if you were to take a single dollars and stack 32 trillion of them, I mean, how many miles would that be?
It would have to go to the moon, I would think, and back.
Yeah. So it's like it's almost like when you look at outer space and you think about, oh well, that star is 50 light years away. It's like, all right, well, you can say it's 50 light years. Did you guys see the moon last night, by the way?
Yeah, it was amazing.
Yeah. So you could say, oh, it's 50 light years away. But I don't think a human being can really understand or grasp how far that actually is. Like if you were to walk 50 light years, you'd be walking for the next, trillions of years. And it's just beyond human comprehension. But I think that's what's going on with the deficit. And sooner or later, man, the chickens are going to come home to roost. And it's either going to require massive cuts, or it's going to require default, or it's going to be hyperinflation. Now, I don't know. Maybe the government should default, because we have to understand the deficit is money we've borrowed, right? So it's like we have the money. It's just like with the Carvana creditors. It's like, hey, man, I'll tell you what, I'll pay you back 90 cents on your dollar, or you get nothing. Take it or leave it. And the United States would still be the safest country in the world.
So what happens if everybody defaults, Mark? What happens if nobody can pay their debt?
Then we probably go into like anarchy.
Well, but there's nothing that they could do about it. I mean, really, honestly, if the whole world quit paying their debts all in one time, then just to hell with it, right?
Yeah, I mean, it would, the global economy would just seize up, because things really run on debt. I mean, companies don't go to the cash register to take money out to pay their employees. They borrow money overnight, or these short-term borrowing arrangements. And if everyone just defaulted, things would just kind of seize up. But I still think the United States. All right, so Fitch just took us from AAA to AA. It's AA is still safer than any other country in the world. But it's going to take some real brain power, and we certainly don't have it now. Like Jerome Powell or Janet Yellen, these are not people. These are not Alexander Hamilton. They're not going to be able to figure out what to do. And I don't know if anyone is. And every civilization has fallen. Rome, Greece. Look at the British Empire. 100, well, not 100 years ago, but maybe 150 years ago, they said the sun never sat on the British Empire because they had stuff all around the world and they collapsed. Now we have some friends. Uh, we have some friends who are from England who live down the road from us now, and they talk about over there like how bad the crime is, and that's why like people leave England to come to the United States. You don't see people leaving the United States to go to England. You
No,
know
and
what I mean?
they've got people running around with knives just stabbing the shit out of people over there.
Yeah, like houses get right. It's just not good. So
Hey,
I think
Sean's
what
got a
happens
question on
is
cat.
is people just end up getting entitled and getting spoiled. And John F. Kennedy said, ask not what your country can do for you, ask what you can do for your country. And then now we have this thing like, oh, the country owes you. Oh, you should be able to go to college for free. Oh, wait a second. You borrowed all this money and you became a major of like transgender studies, and now you can't find a job. So I have to pay off your student loans. I mean, when I graduated business school, I had over $100,000 in student debt, and guess what? I paid it all off by myself.
You
And
know what though, Mark? It's these colleges that have pushed these woke studies that have no bearing on actual reality. And these people spend $100,000 to get that education. Not that they don't have the right. I mean, that they don't have the necessity to pay that debt off. But think about it. This whole woke thing is not a bottom up movement in America. This is a top down push by the Democratic Party to make us all stupid, and it's worked.
yeah,
Think about how
well,
far we've fallen in 2 years since COVID, 3 years since COVID.
all
We're,
right. So
we're
I'm looking at Sean here. I see we're overbought on Caterpillar, but I don't see what you're talking about for resistance. Um,
oh
because
wow.
it's never been at this level before. But yeah, I mean, it did kind of stall out. Maybe resistance is forming around here. But yeah, this is very overbought. So now the question is, well, the idea is, all right, well, we think this thing is going to reverse because it's so overbought. But what do you have to do to make, not, I can't really say make sure, but what do you have to do to get a little bit more, um, what would make it more compelling, or what would make you think that the reversal is actually underway? And so let's look at the 1 day chart from yesterday. Now, when I look at this, I would say, all right, if Caterpillar gets below here, this little bottom here, because notice we were above it. So that's about 282, 282.50. So I would probably, if I was looking at Caterpillar, I would say, all right, if this thing gets below 282.50, I think it's going to keep going lower. So I wouldn't do anything yet, but I would just wait for it to get below this level, because just because it's overbought doesn't mean it can't keep going higher, right? So we want to wait for the reversal to actually start, and then we jump in. No one could ever get the exact top. No one could ever get the exact bottom. So don't even bother thinking about that. What you want to do is like, it's like, you get to the train station and you want to take the train that's going east, and there's a train and you don't know if it's going east or going west. So you don't go on it. You wait to see which way it starts to go. And if it's going to go west, well, you stay off of it. But if it starts to go east, then you go and you jump in as after it starts moving a little bit. I was watching um I was watching Charles, or what's the guy's name? Charles Payne
Yeah.
from Fox Business
Yeah.
yesterday, talking about short sellers. And I mean, he seems like a good guy and everything, but he just really just doesn't seem to understand the way the market works. And it's really kind of ridiculous that you get these people that don't understand how the market work on television giving advice, because then people listen to them. But he was going on and on about short sellers, and like, if you're going to get on the short sellers, why do people sell short? They think the price is going to go down. Why do people sell stocks they own? They think the price is going to go down. So how is a long seller any worse than, or why is a short seller any worse than a long seller? right? Someone might own Caterpillar and say, you know what, this thing was up 8%. I think it's going to go down. I'm going to sell. Okay. Someone else might say, hey, this thing was up 8%. I think it's going to go down. I'm going to sell it short. Like, what's the difference? I don't really get it. I guess it just has like a negative connotation or whatever. And remember, every short needs to be bought back. So if you have a large amount of short sellers, they're going to have to buy their shares back. That can make the price go higher. So I don't know, man. I just think that people just kind of don't really understand how the market works. Like I've seen people say, I've literally seen people say, hey, look at financials. This is it's only 20 cents, but it's 50 basis points. Here, so here's another thing that looks like it's about to go lower is financials. Something you can play here is this FAS, which is an inverse ETF to the financial sector. So this is going to move 3 times in the opposite direction. So even if you don't trade options, you can make money with the market going down. But yeah, I think it's they put these people on TV and they're supposed to be experts, but like one analyst I saw was saying how they should make short selling illegal and people should just invest in ETFs. Now, guess what? If there was no short selling, you couldn't have an ETF because there's an arbitrage process that backs these ETFs that involves short selling. So to say we need to make short selling illegal, but you should only buy ETFs just shows a complete misunderstanding of how the market actually works. You couldn't have an ETF if you didn't have short selling. This ETF is a basket of stocks, okay? And an ETF has what we call a net asset value. Now, I guess we'll go look at this financial sector, seeing that this is what we're looking at. So see here where we have the net asset value, 3533. You know how many shares are in this, right? This shows which companies and how many shares they own, and you know the price. So you can know exactly what the ETF should be worth, right? You just take the amount of shares and the price, and you know exactly what it's worth. And as the close last night, the net asset value was 35.33. Now, let's just say in the market, there's really aggressive buying of the ETF, and it gets above the net asset value. Well, guess what happens? The market makers of the ETF start shorting the ETF to their buyers, and they go out and they buy the stocks to cover their short. Now, for most people, and even in the institutional world, if you short something, you have to buy back whatever it was that you shorted. But if the ETF world, if you're a market maker, you can use the shares to cover your short. If you short the ETF, you can use your shares to cover it. And if you short the stocks, you can buy the ETF to cover that short. So if this got up to, say, let's just say it was yesterday, say it got up to 35.50, and then that asset value is 35.33, the market makers are going to start shorting it, and then they're going to go out and buy the stocks. So this is part of the arbitrage process. If the net asset value if this thing was trading below the net asset value, if there was some really aggressive sellers, well, what would they do then? They would start shorting the stocks and they would buy the ETF. All right. So there's this arbitrage process that goes on that requires there to be short selling. So, I mean, I don't know what to say. These people get on CNBC or whatever, and it's like they're experts, and it's like, oh, well, you got to get rid of short selling. Oh, people should just buy ETFs. It just shows a lack of knowledge of how the actual market really works.
That was really interesting, Mark. Thanks for pointing that out.
Oh yeah, you're welcome. I don't know. I just get frustrated when I see all this misinformation. But here's the thing: when you look at these, you look at these people and these financial journalists, guess what? They're journalists. They're not traders. So they don't really understand how things work. And I think they just one person hears someone say something and then they kind of just regurgitate it without actually thinking about what it is they're actually saying. I mean, when the market was melting down in the beginning of 2022, what was the mantra that you would hear? Oh, you got to go to cash. You got to go to cash. You got to go to cash. Yeah. Well, how about buying an inverse ETF? If you think the market's going to go lower, why don't you buy an inverse ETF? Right? I mean, to me, it's just common sense.
Yeah.
but some people don't understand it. That a lot of people don't even understand that they exist, or they aren't even aware that they exist. Like that spring, I was playing golf with a guy that was actually a securities lawyer who I had never met before, and I was telling him how some of our students were just crushing it. And he's like, "Well, the market's down so big and inflation is so high. How is it possible that you guys are making money?" And it's like, all right, well, a lot of the students bought inverse ETFs. A lot of the students bought ETFs that track inflation. So inflation goes higher, the ETF goes higher. Stock market goes lower, ETF goes higher. There's always opportunities to make money out there. And yeah, I don't know. I just it just gets kind of frustrating when I probably shouldn't even watch this stuff anymore. But somehow it's like I got 200 channels on my cable, and 199 or 195 of them suck, and I never watch. But
Man, you know what? I find myself watching Naked and Afraid all the time, just leaving it on and letting it run. Because I
I
mean,
don't
there's
know,
nothing
dude.
else on TV.
I don't want to see naked people, man.
You don't see naked people; they're just running around. I like to see the animals stalking them. Because first of all, what the hell are you doing going back like a caveman and trying to be out there in the desert with no food and starving yourself when you're not even prepared? At least a caveman grew up in that and he understood how to survive. That's weird. I wouldn't do it.
I used to like watching this movie about, or not a movie, but a show about Mount Everest, the people that climb Mount Everest. And, this to me is pure Darwinism. Um, when you go to Mount Everest, and of course, I've never been there and I never will be there, but there's only one trail going up to the top of the mountain. And you think that, like, oh, I'm going to get to the top of Mount Everest and you're going to just be like all by yourself looking around and whatever. It's like, no, man, you get up there, there's going to be other people there. And there's one trail. So if one person falls and gets hurt, there's a huge traffic jam. The storm comes along, you could all freeze to death. And what really is kind of, you know, weird and eerie is that if someone dies up there, their body stays there. Like no one goes and gets them. So they're climbing up the trail and they're like, oh, there's so and so. He died in 1953. And because it's frozen, the guy looks exactly the same. Yeah. When I was up in Alaska on vacation, and I met a guy who was in the Army, and he flew the Chinook helicopter. And he was saying that they do these rescue missions at Mount McKinley, and it's the same thing. There's people that go up there and they die, and they just leave their bodies there. So anyway, I used to like watching that show, but they took it off because I think it was too gruesome.
Wow, that's weird.
Mutual of Omaha, Wildcat. Yeah, I used to watch that. I like watching the nature shows, but I get sad when like animals get killed. I mean, I know it's just nature, but speaking of animals, man, you should have heard of coyotes here last night. That's why I'm so tired this morning. They woke me up at like 3 a.m. Oh, look at this. Suspended NFL player faces criminal probes for betting on his own team. Now, everyone talks about the Patriots cheating. You know what the biggest cheating scandal is in the history of sports? And even more than maybe what's his face fixed the World Series back in the 20s.
I was fixing to say the White Sox, but go ahead.
When the Broncos tried to bring in John Elway, or when they did bring in John Elway, they figured out ways to pay him more money than the salary cap would allow. He was getting interest from the bonds that they used to build the stadium. So everyone in the front office must have known that was happening. It's not the same as like the Patriots, where Bill Belichick says to the cameraman, "Hey, dude, go over there and see if you can catch some signals." It's like everyone in the accounting department must have known. And this is not conspiracy. They got caught and they had to pay a huge fine, and they lost a first-round draft pick. But everyone talks about the Patriots, but that's because they win. And actually, they don't win anymore now that Tom Brady's not there anymore. So I don't think your Dolphins are going to have to worry about the Patriots at all, man. I think the Jets are probably going to be the Jets with Aaron Rodgers might be kind of interesting this year. I don't know if they're going to be as good as the Dolphins.
I got Christmas Jets tickets too, boy. I can't wait.
Christmas Day?
I think it's the day before, maybe the 17th.
All right. So Fitch strips U.S. of its top credit rating. So this is kind of weird. And you see now it says futures fall after downgrade. Now, I've been talking over the last week about how the market's going to go lower. Did I know that Fitch was going to downgrade? No. Are a bunch of people sitting around saying, oh, Fitch downgraded the debt, I'm going to go out and sell? I don't think so. What I'm looking at is that we have this sentiment that got really high, and we have a couple of our sectors that the charts look, vulnerable. So I don't think the market is down this morning because of Fitch. I don't think people are sitting around saying, oh, Fitch downgraded, we better go sell. I just think that, the market moves and it's about equilibrium, and we're going up. We're out of equilibrium. There's not enough sellers. Then we go sideways because we're in equilibrium. And now we're starting to go down again because we're out of equilibrium. So if something is going up, let's go back to our football analogy, right? So here's the Dolphins taking the ball down the field. Actually, I'm going to diss the Patriots because I am a Patriots fan, so I'm allowed to diss them. So here's the Patriots bringing the ball down the field, and the Dolphins make the goal line stand, and it's 4th and 1, and the Patriots decide to go for it. And Bill Belichick calls some kind of stupid play, like some trick play, and the Dolphins stop him. And then the momentum changes, or the momentum turns, and then the Dolphins start bringing the ball down the field. So that's what happens. And I just think that, we talk about the news, but I think the news really does more harm than good for most people. Because if you were just to not have any knowledge of the market and you look at this and it's like, oh, the futures fall after the downgrade. I mean, is that why the market's down? I don't think so. I think if Fitch didn't downgrade and this story wasn't here, I think the market would be down just because it looks like the sellers are about to take over. So I just think that, the news probably does more harm than good. All right, let's see what else we got going on here. PG&E scraps tree trimming program, once seen as key fire prevention. Yeah, they should do that.
I was just telling you about that the other day. You got to do it.
Yeah, there's wildfires going on out there. All right. Looks kind of quiet. Oh, that's a pretty interesting place there. Lake Como. Miami sees its first population drop in decade. Wonder why. Biden acknowledges Hunter's daughter for the first time. God, he's just whatever. I'm not going to talk about it. Devin Archer says Joe Biden often joined calls with son Hunter. Yeah, probably. Supermoon lights up August sky. All right, let's go see what's going on over here at Market Watch. I think this site this is like a good kind of tabloid site. All this stuff about Donald Trump. It's like, come on, guys. Oh, DuPont. Let's see what that's doing. They're just making him. They're just firing up his base. So I don't understand it.
Man, I just don't understand how they think that it's okay for him to pay the legal fees that he's got to pay, but for Biden to have the Department of Justice behind him paying all Hunter's legal fees. I mean, it's really kind of wrong, man. It's so of a double standard. It's pathetic.
How about Hunter gets a friggin' motorcade to go to court?
Yeah.
The guy's got like all these SUVs, of Secret Service. Like who the hell is he, man? The guy's a sleazebag.
Flying around in Air Force One with a sack of crack.
It's like this dude has daughters, and it's like he's filming himself having sex with prostitutes smoking crack. I don't care if you're a Republican or a Democrat. It's like, dude, these are not the actions of like a guy who's a good guy. You know what I'm saying?
You guys should go back and watch that video we posted in the beginning of the stream. Go ahead, Mark.
Anyway, here's DuPont. So DuPont reported, but notice how they hit resistance. So is it down because of their earnings, or is it down because we got into resistance and then we have anxious sellers undercutting each other? So let's see. DuPont beats earnings, beats estimates, revises 23 outlook. So the numbers were good, but the stock is down. So go figure it. Now, how does that happen? Well, I think it's probably because we got to resistance. And I think the stock would be down regardless of whether they report it or not.
Mm-hmm.
I mean, it was down 75 basis points yesterday. It's down, maybe it wouldn't be down this much, but when things get to resistance, they tend not to stay there for too long. They tend to break one way or the other. And I mean, look at this. We got to resistance back here in February, and we were there for 3 days. We get to resistance here. We're there for 2 days. So I don't think people are sitting around saying, all right, well, DuPont missed earnings. Let's go sell it. Yellow's shutdown could cost DuPont taxpayers money. Yeah, that's true. Because they're going to just come in and they're going to, government's going to bail out the pension plan. So we will be on the hook for paying for these people's pensions. So once again, yeah, the Pension Benefit Guaranty Corporation, which helps backstop pension plans. Last year, the Biden administration distributed $36 billion to shore up in pension plans.
Only because he knew he was going to destroy the economy.
Well, I don't know. It's because they just want to buy votes.
That's all.
It's really what it comes down to. All right, everyone. I think I'm going to get going. It's 8:45, and I got to get ready for my 9 o'clock call. But kind of in terms of the stocks, we're really where we've been over the last week. Well, healthcare is broken down. Next up, I think financials is going to break down, and then our tech sector is going to go lower. So I still think the market's going to move lower. And yeah, I mean that's what I think. Markets go up, markets go down. But you don't have to put your head in the sand if you're not an options trader. Think about some of these inverse ETFs. Like you got SH. This goes in the opposite direction of the S&P 500. So if the S&P 500 goes down 2%, this will be up 2%. You also have, for those of you who are really kind of bearish, this ETF will go in the opposite direction by 3 times. It uses leverage. So if the S&P goes down 1%, this should be up by about 3%. But yeah, so things will probably play out over the next week or so. I think in the summertime, they kind of move a little bit slower than usual. All right, everybody, that's it. So thank you so much. Please come back tomorrow morning, and I guess we'll see you all then.
Thanks, guys. Have a great day.